For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. To select stocks worth buying, I evaluate factors such as revenue growth, profit margins, and debt levels. I also take into account a company's market position and competitive edge. Additional factors include industry trends, technological progress, and possible regulatory impacts. Each stock is chosen based on its ability to generate short-term gains while also providing long-term value. Nvidia is a leading developer of graphics processing units for gaming and professional markets, as well as system-on-chip units used in mobile computing and automotive markets. The company has emerged as a significant force in artificial intelligence, data centers, and autonomous driving technologies. Nvidia's status as a top stock pick is based on its dominance in the GPU market and its essential role in advancing AI and machine learning. While the company recently missed earnings expectations and saw a decline in capital, this should be viewed as an opportunity for investors, as Nvidia now presents a more attractive entry point than it did a month ago. The drop in gaming GPU sales is a temporary setback that offers a chance to invest in a company with strong long-term growth potential at a more appealing valuation. Nvidia's products play a critical role in cutting-edge technologies, especially in the fast-growing field of generative AI. As this technology expands into sectors like content creation, healthcare, and finance, the demand for Nvidia's high-performance computing solutions continues to rise. The company's data center business has seen extraordinary growth, overtaking gaming as its largest revenue generator. This shift demonstrates the growing adoption of AI-powered cloud services and reinforces Nvidia's strong position in the marketplace. In addition to its AI and data center success, Nvidia is also advancing in the automotive industry with its autonomous vehicle platform. As the auto industry moves towards self-driving cars and enhanced driver assistance systems, Nvidia is well placed to benefit from this trend. Nvidia's ongoing innovation, showcased through new architectures such as Hopper and forthcoming products like the Grace CPU, along with its expanding market opportunities in areas such as Edge AI and 5G, make it well positioned for continued growth. Next, we have Amazon. Amazon remains a top stock choice due to its diverse and resilient business model, which has proven strong even amid economic challenges. Central to Amazon's success is its e-commerce platform, which continues to benefit from the shift toward online shopping. This trend, which was accelerated by the pandemic, shows no sign of stopping, as consumers increasingly appreciate the convenience and wide selection offered by Amazon. Amazon Web Services, the company's cloud computing division, remains a major profit driver. Amazon Web Services saw a 12% year-over-year rise in net sales to $22.1 billion during the second quarter of 2024. This growth is driven by the increasing use of cloud services by companies that aim to digitize their operations and leverage advanced technologies like artificial intelligence and machine learning. Amazon's recent collaborations, such as its partnership with Anthropic to create advanced AI models, solidify its leadership in cloud computing and AI innovation. Amazon's advertising business has become another growth engine, with ad revenue rising 22% year-over-year to $10.7 billion in Quarter 2, 2024. This rapid growth is due to Amazon's ability to provide highly targeted advertising based on consumer shopping habits, making its platform increasingly appealing to advertisers. Additionally, Amazon's entry into new areas, such as healthcare with its acquisition of One Medical, and its ongoing investment in technology like drone delivery and autonomous vehicles, demonstrate its commitment to long-term growth and innovation. The company's focus on improving operational efficiency through cost-cutting measures and streamlining its fulfillment network has also bolstered its profit margins, making Amazon an even more appealing stock. As Amazon continues to capitalize on its massive ecosystem, innovate in various sectors, and explore new markets, it remains a strong choice for investors seeking growth potential and a history of disrupting traditional industries. Moving on to Microsoft, this tech giant remains a top pick for October due to its strong performance across multiple business segments and strategic positioning in fast-growing technology sectors. The company's Azure cloud platform remains a key growth driver, with cloud services revenue up 28% year over year in the most recent quarter. This growth is propelled by the ongoing digital transformation across industries and the rising adoption of artificial intelligence and machine learning technologies. Azure's strong market position, second only to Amazon Web Services, ensures that Microsoft will benefit from the expansion of the cloud computing industry, which is projected to reach $1.6 trillion by 2030. Microsoft's partnership with OpenAI extends artificial intelligence integration beyond productivity tools into its Bing search engine and Windows operating system. The gaming division has also seen notable growth, particularly following Microsoft's acquisition of Activision Blizzard for $68.7 billion in October 2023. This acquisition significantly enhances Microsoft's standing in the gaming world, adding popular franchises like Call of Duty and World of Warcraft to its portfolio. The Xbox Game Pass subscription service continues to grow with more than 25 million subscribers to date. Additionally, Microsoft's focus on mixed reality technology, as seen in the HoloLens and the development of the metaverse-oriented Mesh platform, positions the company to lead the way in the next wave of digital interaction. Financially, Microsoft's strong balance sheet, regular dividend increases, and ongoing share repurchase program make it a compelling option for both growth and value investors. Tesla comes next on the list. Tesla's dominance in the electric vehicle sector and its continuous innovation make it a top stock choice for October. The company's recent release of the Cybertruck, which began deliveries in late 2023, has created a new market segment and highlighted Tesla's ability to push the boundaries of design and engineering. Beyond electric vehicles, Tesla's energy business presents a huge opportunity for growth. Products like the Powerwall and Megapack are gaining traction in the residential and large-scale energy storage markets. Tesla's involvement in several large energy storage projects, such as a 360-megawatt battery system in Texas, underscores the growing demand for its solutions. Tesla's full self-driving technology, which has continued to improve throughout 2024, could also generate new revenue streams through licensing or autonomous vehicle services. Tesla's advancements in artificial intelligence, highlighted during the recent AI Day event, where it showcased its Dojo supercomputer and Optimus robot, signal the company's ambitions beyond the automotive sector. Despite some stock volatility, Tesla's brand strength, technological leadership, and visionary management continue to attract investors. With steady gross margins and growing opportunities in energy storage and autonomous technology, Tesla remains a top investment in the transition to sustainable energy. Lastly, JP Morgan Chase is another stock to consider. JP Morgan's third quarter 2024 earnings exceeded expectations, with net income climbing to $13.2 billion, up 35% year over year. The strong performance in consumer banking and increased net interest income were major contributors to this growth. JP Morgan's acquisition of First Republic Bank in May 2023 has also expanded its high net worth client base and contributed to a 30% rise in deposits. Despite a challenging environment, JP Morgan's investment banking division remains a leader in global banking fees. The bank's commitment to technology is evident in its recent introduction of an artificial intelligence-powered digital assistant for wealth management clients and its blockchain-based payment network. JP Morgan's capital strength, with a common equity Tier 1 ratio of 14.3% as of quarter 3 2024, ensures the company's ability to grow and remain resilient during economic challenges. JP Morgan continues to attract investors with its shareholder-friendly policies, including regular dividend increases for over a decade. The current yield stands at around 3.2%. Additionally, its share buyback program, with a new $12 billion authorization for 2024, signals the company's confidence in its financial health. With interest rates stabilizing at higher levels, JP Morgan is well positioned to benefit from increased net interest income, which grew 21% in the latest quarter. The bank's diversified business model provides stability, while its risk management practices give investors confidence that JP Morgan can weather potential economic headwinds. From technological innovations in AI and cloud computing to leadership in electric vehicles and financial services, these companies are well positioned to take advantage of key market trends. While past performance does not guarantee future results, these stocks have shown strong fundamentals and growth potential, making them excellent choices for October. As always, it is important to conduct your own research and consider your investment goals before making any decisions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.